For decades, world trade has been dominated by the dollar. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. The Swiss system that actually became weaponized by the US, the Monetary Authority of Singapore, and the People's Bank of China have renewed the bilateral currency swap range. Saudi Arabia is in discussions with China to price some of its oil sales in yuan, but as ties with Washington continue to be strained. Beijing and Moscow are diversifying. China and Russia had taken another step closer towards dumping the dollar and agreed to trade in their respective national currencies, the Russian ruble and the Chinese yuan. Hello everyone, the US dollar has been the most powerful currency in the world for 80 long years. This reserve currency status gives the United States such unprecedented power over the world economy. That can the economy of any country within a fortnight, and because of this power, it has even dominated giant players like Russia and China. But this is where China and Russia have actually come up with a master plan to kill the dollar dominance in the world. If you look at the past 10 years data, you will see that it's actually working out quite well. In 1999, USD had 71 market share among the global reserve currencies. But in the past 10 years it has dropped to less than 59, and in the next 10 years, if this strategy of China and Russia works out, we might see the rise of a new reserve currency in the form of Chinese yuan. The question is, what is the master plan of China and Russia to kill the dollar dominance in the world? How do they plan to dethrone us from the superpower status of the world? And lastly, what are the challenges that China and Russia will face in this currency wars of the world? To understand this China-Russia strategy, we first have to understand, why is the US dollar so powerful? And why does it have almost a monopoly status among the reserve currencies of the world? Dollar served as a reserved currency of trust, whereby in 1994 US said if you have dollars, we would exchange its value in gold at $35 per ounce. So now two countries that may or may not trust each other could do trade with each other without trouble. So this is way when Indonesia got $1 million from Pakistan. Even if Indonesia did not trust Pakistan, they know for sure that the $1 million that they got could be exchanged for gold with the US. So it was definitely worthy. Otherwise, if they do trade with Pakistan in Pakistani rupees today, 10,000 Pakistani rupees might be worthy of buying 1 gram of gold. But the next week itself, if Pakistan prints more money and declares that 20,000 Pakistani rupee will buy you 1 gram of gold, do you realize what would happen? The entire value of trade with Indonesia would actually collapse. Moreover, if Indonesia wants to use Pakistani rupees, then if other countries do not trust Pakistan's economy, then that money again could not be used for trade. But if the same transaction happened in dollars, the United States guaranteed the value of dollars with gold, so you could trade with any country with the US dollars. And be rest assured that it could be used to trade with any other country to buy any other commodity. But in 1971, Richard Nixon came out of nowhere and ended this gold standard where everyone was free to choose any currency to trade. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Who have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets. The effect of this action, in other words, will be to stabilize the dollar, but even then almost all countries stuck to the dollar. Why? Because dollar was the only currency that could buy you oil from the Saudis. And why is that? Because in 1945 the US President Franklin Roosevelt made an agreement of the century with the Saudi king, whereby the US guaranteed the security of Saudi Arabia, and in exchange the Saudi king agreed to sell oil in US dollars. So if you wanted to buy oil, you needed to have US dollars. This is the second reason for the dominance of the dollar. And that is the power to purchase oil, and these two superpowers of trust and oil gave the US the third superpower through the SWIFT network. And how does a SWIFT network work? Through the US dollars stored in US bank accounts. So if Pakistani trader wanted to make a transaction to the Sri Lankan trader, this system would have Pakistani trader, Pakistani bank and American bank. One American bank, two foreign bank and foreign trader. The highlight over here being both Pakistani and Sri Lankan banks will have an account in the American bank, where it has its money stored in dollars. So if Pakistan wants to import minerals worth 1 crore rupees from Sri Lanka, they would give the Pakistani bank 1 crore Pakistani rupees and ask them to pay the same amount in dollars to the Sri Lankan trader's account. So now that Pakistani bank has 1 crore rupees in its Pakistani account, it would send a message to its dollar account in America to send 1 crore worth of dollars to the Sri Lankan bank's dollar account in the US. In this case, assuming 80 rupees to the dollar to be exchange rate, 125,000 would be transferred from the Pakistani account in the US to the Sri Lankan account in the US. And now that the Sri Lankan bank has $125,000 in the US account, It would pay the Sri Lankan trader the equivalent of $125,000 from its account in Sri Lanka. This is how the SWIFT network works. And just like Pakistan and Sri Lankan banks today, more than 200 countries and 10,000 banks trade with the US dollars and have their forex reserves with the American banks. And the catch we hear is that if a country has $100 billion in forex and spends only $30 billion in import and export, they would have $70 billion in surplus. What, just like we avoid keeping a lot of savings and invest our money in stocks, these countries invest their excess foreign reserves in US Treasury bonds. And just like our government bonds, this is a mega bond whereby countries are lending billions of excess dollars to the US and expect a return after maturity, and this is where the unfair advantage of the US dollar comes in as of January 2022. While Japan had $1.3 trillion in US securities, China holds $1.06 trillion, and UK held $608 billion in US Treasury bonds. And in total the US held $7 trillion by foreign and international investors as of September 2021. This is so much money. In simple words, the US dollar has three superpowers: trust for trade, power to buy oil, and lastly it has all the excess forex reserves invested in its own economy with $7 trillion in bonds. This is where both Russia and China have a problem. China is extremely annoyed at the US for supporting Taiwan. And Russia is already the most sanctioned country in the world. So now Russia is not able to use its dollar accounts in the US to do trade. And at the same time, most of the Russian companies have also been removed from the SWIFT network. So the two powers joined hands to take down the mighty United States of America. And this is where China and Russia started their game plan. The question is, how can China and Russia together kill the dominance of the dollar, and what exactly is their strategy? Well, the first thing we need to understand is that leverage is one of the most powerful tools in geopolitics. In this case, Russia is one of the largest oil and gas producers in the world. Although Saudi and other countries were selling oil and gas in dollars, Russia punished its unfriendly countries by asking them to buy Russian oil in rubles. So by default, most of the European countries had to buy ruble in spite of. They hate Putin for it, which means what in the payment network diagram, instead of US banks having dollar reserves, all the unfriendly countries that bought oil from Russia now had to keep their money in the Russian central bank. So just like dollar reserves held the US economy, the ruble reserves are expected to compromise for the damage to the Russian economy. Which means, just like the petrodollar, the rise of the petrol ruble. If you look at Russia's dollar reserves, they have been preparing to get rid of the dollar since 2014 itself. The US treasuries have gone down from $150 billion in 2013 to just $3.98 billion as of 2021. This is the leverage that Russia has over Europe. Similarly, China has its leverage with the Belt and Road Initiative countries. China's Belt and Down Initiative is a $3 trillion project, whereby the Chinese have given out over generous loans to countries all across the world. And you know what? Under the BRI initiative, in total there are 165 countries in the world who owe a collective debt of $385 billion to China, and many of these countries have taken so much debt from China that they cannot afford to pay it back to China. And we saw this very, very clearly with both Pakistan and Sri Lanka. This is where China's strategic move comes in. And now China has leverage over these countries. Experts say that China would now ask these countries to take and pay back loans in yuan. And in exchange, China could incentivize the scheme by giving them a 1% discount on their interest. Now, do you realize if Pakistan owes $25 billion in debt to China? Considering its economic crisis right now, a 1% discount on a $25 billion in debt is a big deal for Pakistan. In fact, since the inception of the BRI initiative, China has already issued 14 of all its loans in its own currency without depending on the dollar. And guess what? In 2018, the Central Bank of Pakistan had already agreed to conduct their bilateral trade with China in yuan. And even other countries like Myanmar, Cambodia, and Russia are doing the same. On top of that, China is now the largest trade partner with 25 BRI participating countries. So again, the leverage of trade for China is very strong. So with the combination of both trade and debt, China could pressurize these countries to use yuan over the dollar. So this way, over time, China could build the strings of 165 nations and could drastically increase the circulation of yuan. Now the question over here is, all these countries are mostly poor countries. So how would China and Russia get rich countries like England and South Korea to skip the dollar? Well, firstly, Russia is strongly supporting China and has already turned the Chinese yuan into the reserve currency. So this is a major move, and as far as other countries are concerned, they have something called bilateral currency swap agreement. The question is, what is the bilateral currency swap agreement and how does it actually work? In international trade as usual, let's try to understand this using a story. Let's say China and UK sign a bilateral currency swap agreement of 5 years for a value of $1 million. This means China will sell $1 million worth of yuan to the UK and the UK will sell $1 million worth of pounds to China. So after conversion, China will give 6.842 million yuan to UK and UK will give China 847,250 pounds. And they will agree upon the exchange rate to be 8.07, so for 5 years Chinese central bank can sell these pounds and get US dollars, or it can lend these funds to a domestic bank and companies to settle their trade. Similarly, the Bank of England can do the same with yuan. So now if an English businessman wants to buy €1 million worth of goods from China, if he went by the conventional means, what would he have to do? He would have to pay in pounds to the English bank, which will then convert the sum to dollars, then transfer the dollars to the US bank account in China. And then the Chinese bank will transfer the converted sum of yuan to the Chinese businessman. This will incur both a lot of time and a lot of costs, but now the English businessman would simply borrow 1 million yuan from the Bank of England and directly pay the Chinese bank account in England. And as soon as this money is transferred in the Chinese bank account in England, the Chinese bank in China would transfer 1 million yuan to the Chinese businessman, and the same thing could be done vice versa when a Chinese businessman wants to buy something from UK. So two big players can now do international trade without depending on the US dollar. This is how the currency swap agreement works. And after 5 years, both the central banks of UK and China will pay their respective currencies back at the agreed exchange rate. So this way both countries get 3 major advantages. Number 1, both countries can eliminate their exchange risk. Number 2, both countries can use this currency to exchange it for dollars if needed. Thirdly, businesses in both countries can carry out trade more economically, so the business relationship between both the countries get better and better with time. And last and most importantly, the dependency on US dollar decreases by a large extent. When Beijing has signed more than 3 trillion years worth of bilateral currency swap deals with more than 40 countries across the world. And this includes 400 billion yuan each with Hong Kong and South Korea, 350 billion yuan each with Bank of England, and the European Central Bank 300 billion yuan with Singapore and 150 billion yuan with Russia. And the cherry on the cake, since China is the world's largest manufacturer with almost 20% of the entire world's manufacturing happening in China, they could further leverage this in order to push the companies to pay in yuan instead of the US dollars. And now Saudi Arabia is considering selling oil in yuan, which means if Saudi Arabia starts selling oil in yuan, a lot of countries would rush to buy yuan. And again, like the case with excess forex being invested in US bonds, the excess yuan would then be invested in Chinese bonds, making the Chinese economy more and more powerful. This is how China and Russia are slowly building currency strategies to overthrow the reserve currency as thrown from the US dollar. So this strategy looks pretty clean and straightforward right now. Does this mean that the yuan is going to overthrow the dollar? The future will determine the countries actually adopting the yuan over the US dollars. And lastly, US obviously does not like the rise of the yuan and the amount of money and military leverage that the US has. It's not so difficult for the US to actually push against the Chinese yuan, and the key to this is going to be something called the digital dollar. If you learned something valuable, please make sure to hit the like button and please subscribe to my channel. Thank you so much for watching.